Lehman Brothers is going bankrupt.
Lehman Brothers suffering a spectacular downfall. Its stock at one point this year sold for $67 a share. Right now it's trading at just $3.65 a share.
Lehman Brothers staff arrived at work in London this morning to be told the bank had been put into administration.
So to really understand what happened, we need to treat this exactly like what it is, a corporate crime scene. And our primary piece of evidence? It's this, the Valukas Report. We're talking 2,200 pages of legal testimony, internal emails. I mean, this is the definitive account of how one of the most powerful companies on earth just disappeared.
I clearly made mistakes. I talked about it. Too much commercial real estate, but we addressed that. Less liquid assets, we cut by 50%. We addressed that. Capital, we got to 11% Tier 1 ratio.
All right, let's open the official case file. We're starting right here. Because this wasn't just some business filing for Chapter 11. No, this was the trigger, the first domino that set off a global economic meltdown. We're going to walk through the evidence, piece by piece, to see exactly how it all went so wrong. You know, before we can really dig into the cause of death, we have to understand the life. We need to get a sense of the sheer scale, the perceived invincibility of this institution. Because honestly, without that context, the speed of its collapse is almost impossible to believe.
Let's start with this number. Just let it sink in. Over 600 times billion dollars in assets. At the time, that made Lehman Brothers the fourth largest investment bank in the entire United States. This wasn't some shaky startup, folks. This was a pillar of the global financial system, a true titan. And this thing had a history, a 158-year history of survival. I mean, think about it. Lehman weathered the American Civil War, it got through the Great Depression, it survived multiple recessions. By 2007, it looked stronger than ever. This history built up a powerful myth, both inside and outside the firm, that Lehman was basically indestructible.
But here's the thing. Beneath that shiny, successful surface, people on the inside could already see the cracks starting to form. This quote from Lehman's own chief risk officer, well, this is our first real piece of forensic evidence. It tells us the fatal blow wasn't some external shock. Nope, the disease grew from within, driven by this relentless, obsessive push for growth no matter the cost.
Okay, so now it's time for the autopsy itself. We're gonna peel back the layers and pinpoint the exact vulnerabilities, the fatal flaws that made this giant so incredibly fragile. And this, right here, is where the story turns from just hubris to straight-up deception. To really get to the heart of Lehman's fatal flaw, you gotta understand one really important concept: leverage. Just think of it like this. For every $1 of your own money you use, how many dollars are you borrowing to make a bigger bet? It's great when you win, because it magnifies your gains, but it also magnifies your losses.
And that brings us to maybe the most shocking number in this whole investigation. Lehman was operating at leverage ratios of up to 40 to 1. Let me say that again. For every single dollar of their own money, they were borrowing and betting with $40. You can do the math. A tiny 2.5% drop in the value of their assets was enough to completely wipe them out. They had zero room for error, none. So how in the world did they hide this insane level of risk? Well, the Valukas Report found a nasty little accounting trick they used called Repo 105. Essentially, Lehman would temporarily move up to $50 billion of assets off its books right before they had to file their quarterly reports. It made the company look way healthier, way less indebted than it actually was. It was a calculated deception, like building a skyscraper on a foundation made of sand.
And when you're operating with that much hidden leverage, when you're that fragile, you are just one shock away from a total catastrophic collapse. That shock came during one final, absolutely frantic weekend. This is when all those underlying problems finally triggered a massive, fatal heart attack.
The final hours played out with just brutal speed. On Friday, the government says no bailout. You're on your own. So all hope shifts to a last-minute sale to Barclays. But by Sunday, that deal falls apart over a regulatory problem. The clock just runs out. And in the dead of night, at 1:45 in the morning, it's over. A 158-year-old titan was gone.
The death of the patient is one thing, but what happened next? What happened next was the virus spreading throughout the entire global financial system. This is the reckoning.
This is where the collapse of one single firm suddenly becomes everybody's problem. The immediate impact was just sheer panic. On the very same day Lehman filed for bankruptcy, the Dow Jones Industrial Average plunged 504 points. And listen, this wasn't just numbers on a screen. This was the sound of the world's confidence completely evaporating in real time.
And that market drop, it had a very, very real cost. The commission figured out that $700 billion in value was just erased, gone, from retirement plans, pension funds, personal savings, all in a single day. This is the moment the crisis jumped from Wall Street right onto Main Street.
But the most dangerous part was something most people couldn't even see: the credit markets. You know, the system where banks lend money to each other just to keep the gears of the economy turning. They just stopped. They froze solid. Nobody knew who was safe anymore, so nobody would lend to anyone. The lifeblood of the global economy just froze in its veins.
So, let's deliver the final verdict. We've examined the history, we've looked at the fatal flaws, we've seen the global impact. Now we have to answer the single most important question in this whole investigation.
Was this just an unpredictable accident, a black swan event that nobody could have seen coming? Or was it something else? What does the evidence from our autopsy actually tell us?
Here it is, the official verdict. The cause of death wasn't just poor risk management, it was active deception. The leadership didn't just bet the entire firm on the housing market. They used accounting tricks like Repo 105 to actively hide the true scale of that bet from investors, from regulators, and maybe even from themselves.
And if you have any doubt, the final report puts it in black and white. This wasn't a market failure. It was a leadership failure. The people in charge, at every single firm that went under, they just did a terrible job of managing risk. Period.
So, what's the big takeaway from this whole forensic deep dive? It's a lesson that's absolutely timeless. You can't hide from reality. Poor risk management, at its core, is a form of self-deception. It's pretending the rules of gravity just don't apply to you. And as Lehman Brothers proved to the entire world, that is never, ever a sustainable business strategy. The story of Lehman Brothers really leaves us with this one crucial question for anyone in business. When does an aggressive strategy cross that line and become reckless deception? Well, the evidence from this autopsy seems pretty clear. The line is crossed the exact moment you choose to start hiding the truth. The Valukas Report is more than just a legal document. It's a warning. Lehman Brothers didn't collapse because of bad luck or an unpredictable crisis. It collapsed because leaders at every level, executives, accountants, auditors, chose short-term appearances over long-term reality. They used Repo 105 to create an illusion. They refused to mark down assets that everyone knew were worthless. And when the truth finally came out, 28,000 people lost their jobs and millions lost their savings. The lesson? You cannot accounting trick your way out of fundamental problems. The market always finds the truth. For every entrepreneur watching this, the numbers in your business are not suggestions, they are reality, and reality always wins. If this forensic deep dive changed how you see business leadership, hit that subscribe button. Drop a comment, what corporate collapse should we investigate next? Until then, stay sharp, stay honest, and remember, the documents never lie.